traders, Todd Gordon here with tradinganalysis.com. This is the free stock options video update for Tuesday, January 27th. And we are going to focus on a long position in the IWM, small cap Russell. We've seen a high elevated volatility period here in the last couple months, very dissimilar to what we've seen in 2013 and 14. So volatility settled up into a new range, and with everything that's going on in Europe, you'd expect to see stocks lower. But all they did was just whip back and forth in massive ranges and really didn't give up anything in the downside. So we see an underlying bid in the tape. We want to head over to the chart, set up some long IWM call options. Okay, guys, here we go. Let's start off on the 2-hour Russell 2000 cash chart. As I said, we've seen some pretty good relative strength in those small caps relative to the SPOOs, the NAS, and the Dow. So we want to focus in there. Let's dive in. Okay. Now, there's going to be a lot on this chart, okay? A lot of drawing. I was kind of like that kid in high school who drew all over his notebook. So now I get to draw all over charts for a living. It's pretty cool. So anyways, I'll handicap this, show you exactly what it means, and most importantly, how to take action on it. So we're looking at a pending breakout of a 2-hour Russell chart. We see this as the first wave, okay, of a 5-wave rally. The sell-off here was a 3-wave move in 2. This was the market's best effort to kind of push us through on those European concerns. Couldn't do it. All we could manage was a wave 2 into the 786 retracement of wave 1 verse 2. Now I think we're rallying up in wave 3. We broke out. We didn't break out. We were testing the breakout level from the B wave high. Strong close here today on Monday. And we're looking up for wave 3. Now, your first step to figure out how far wave 3 should go is to figure out the minimum distance, which is that same distance that was traveled in wave 1. So you want to go back, and I want to just right click and go ratio analysis 3v1 because we're studying wave 3 versus 1, and that 100% is your minimum. That's your first objective. Okay, so that's where I want to start and kind of set up our first trade just to get to that point. And then once we get there, we can kind of take the temperature of the market and figure out if we have more upside to go in that third wave. So from here, we want to kind of fine-tune this count. Inside of each of your trend waves, which are 1, 3, and 5, they break down into 5 smaller waves on smaller time frames. That tells you have a good, healthy trend wave. Your corrective waves, like 2, is a 3-wave move, big old ABC. So now what we do is I want to take the next fib study. I'm going to right-click, ratio analysis. I want to do ongoing blue wave 3 versus 1. So we're doing blue wave 3 versus 1. And again, we have plenty of analysis and explanations as to why we would do that in our site, Trading Analysis. But I'll just kind of cut to the chase for you and tell you that objective 2.618 of wave 3 compared to wave 1 matches right up with 100% of the higher degree 3v1. See, what you're doing here, guys, is using multiple degrees of trend to isolate key actionable trading points, okay? That's how you really kind of get ahead of the market, all right? And again, that's what we want to do is motto my company, plan your trade your plan. And using this style, this is how you can get ahead of it and prevent those costly, emotional, reactionary trades that we've all done. All right, guys, so what we're going to do is set this up in the IWM, which is your ETF. I've set it up here. We're just going to overlay it, figure out the same levels. So IWM closed at about 119.25 today. Our upside of these 2 fib levels right here, about 123 over here on the left scale. So we're looking to do about a 123 call spread. You want to buy the at the money, you want to sell the objective, okay, as defined by Elliott and Fib. Let's head over to the platform here and look to set this trade up. Again, we're going to do a 119 up to our objective around 123. We're going to be buying the at the monies. We're going to be selling the Elliott and Fib objective for our short strike. So let's head over to the platform. And first thing we have set up here is the option stats for today. It's got an IV percentile of 33%, so it's in the bottom third of its range in terms of 52-week implied volatility. So basically that means those options are a little cheap right now, which is surprising. So let's go over to the option chain. We're going to do this in Feb. We don't need that much time. This is going to be kind of an in and out trade. So we're going to do the 119s. Right click on the offer, buy vertical 119, 123. Trading $1.79. I'll break it down to 1 contract so we can know exactly what we're risking here. Per contract, you're going to be risking $1.79, $179 to make $221. All right, so we'll be looking to do that trade tomorrow with clients. And guys, if this video helped, do me a solid favor. I would much appreciate it if you give me a like or a subscribe here. It lets me know you're enjoying the content, number one. And number two, it really helps me out because we want to try to get this content out to people who may also be able to benefit like you. And there's a lot of good content on YouTube. So I need your help to get it out there. Let me know that you guys are enjoying it. If you're not, please let me know. Put a question, comment, insult, whatever you got down there in the comments. Let me know. Interact and let me know what you're thinking. And I really do appreciate the time. All right, guys, leave it there and see you on the next video update.